And with this kind of a background, I would want to welcome the panelists and open the discussion by requesting Anita for some opening remarks on this.
Thank you very much, Saurabh. I hope you can hear me well.
Yes, very much.
Okay, thank you very much. So this is a sector which I think in many ways is going to define a very basic human right of housing as has been stated by the United Nations. And with 1.8 billion people with no access to housing across the globe, I think it's something that we cannot afford to ignore. As was mentioned earlier, the rate of urbanization of around 57% is something that is only going to trend upwards. So, given all of this, there is no debate that affordable housing is a very key sector. And proof of that is that in a lot of the election manifestos that we've seen, whether it's in India, in Canada, in Germany, there has always been a huge push towards providing affordable housing for the citizenry of these different countries. Uh, I think, if just in my view, to take an analogy to the renewable energy sector, which 10 years ago, similar to affordable housing, was one which was known to be required for various reasons. There was a huge push that this is something good and should happen. But actually, renewable energy as an asset class got mainstreamed when it became profitable. So I think the fundamental issue for us to discuss today is really how do we get the affordable housing sector to become profitable and therefore attract capital from both long term investors as well as investors who can really understand and push for making this a mainstream asset class. And I would say that the time is right now. One, of course, for the demand that I mentioned, but also there's a real opportunity, both with the availability of technology and the push for ESG, as was mentioned in the introducing fireside chat. I think through following energy and resource optimization in building of affordable housing, bringing down the costs, making it cost efficient, and also having access to the $42 trillion that are earmarked for ESG with the use of technology, with prefab and other ways in which to really speeden up construction and reduce the cost of construction. I think these are the areas which could really bring down the costs, make this a more profitable sector, and mainstream it. Thank you.
Thank you, Anita. Vipul, some opening remarks from you.
Sorry. Can you hear me?
Yes.
Okay, thank you. Now, first of all, thanks, Apriya, for calling me for this panel. I'm extremely honored. Apart from all the things that Anita very nicely put, which is related to financing and technology and ESG, being now trying to make money of this emerging class of real estate assets, I think one very important factor is the counterparty. This is true for Indian real estate, and I can say it is true for a large part of global real estate, because any of these things or for any asset class in real estate to emerge into the mainstream, it is very important that it attracts the big players and the big boys. And I think that is what is changing. Clearly, there is now streams of capital which is available, and as different experiments have shown that now there is capital on the table. It need not just be something which goes under the traditional CSR or the corporate social responsibility of an organization or some kind of a public-private partnership. It can be a purely private initiative and still make the returns at the scale at which would merit getting any of the big players interested in this asset class. That is one. And second, I think the fact that IFPRI has chosen this to be on its a session shows that there is some interest that is emerging, and that is very heartening to see. I think talking about something always makes it go to the mainstream. It has a big play in the perception part. So apart from all the factors that Anita mentioned, I think we have a very interesting time ahead.
Thank you, Vipul. Anand, your views on the sector, and how do you see things emerging in this space?
So thank you for bringing me in, and thank you, IFPRI, and the other fellow panelists for having me here. So sort of my comment was going to be very similar to what Vipul was saying. I think affordable housing is actually already in the mainstream. So 10 years ago, I don't think anybody was talking about affordable housing in the context of housing, right? People were talking about low-cost housing, which was all a government responsibility, and we didn't really have a narrative on affordable housing. And going back to what Anita said, this was very similar to renewable energy 2 decades ago, right? And what has changed it is, first you bring the narrative around it, and then you form the right government policies to make sure that you have a vision and you have an enabling framework. And once you have an enabling framework, then it's about how fast is the execution, what are the execution challenges, how do you iron them out? And all of these, I think, are currently sort of playing out. If we see what's happening to residential housing in the last 5 years, the focus has been on affordable housing from the demand point of view as well as from the supply point of view, right? So the question now is, when you talk about mainstreaming, how do you mainstream this in investors' portfolios? And that is the discussion I think that we're really having, and not opposed to the asset class and saying, is affordable housing important, or is it an integral part of what we describe as residential housing? So yes, so I think in my mind the focus is really how do you explain and communicate to investors on this asset class, the ability for it to earn a right to be in a portfolio through returns, through impact, through ESG, and all of those factors. So I'm actually looking forward to this discussion. Thank you.
Thank you, Anand. Let me bring in Ashish here. Ashish had some very interesting thoughts on, how this is a sector which requires a different attention, right from the operating structure to a different set of challenges which need to be addressed. Ashish, opening remarks from you.
Thank you, Saurabh. Can you guys hear me?
Yes, Ashish.
Great. So, I go last. So I think the other panelists have done most of the job already, but I get to put things in perspective. And I will share my own experience as a private equity investor. So I like to think of real estate housing as like 5 segments. The top 2 segments are fairly well captured by private developers, the mainstream private developers. The third is really what I call mid-income. The fourth is really, in my opinion, affordable housing. And the fifth, low cost or social housing, which I think for most part must be done by the government. It's really the segments 3rd and 4th that we are talking about where a scalable opportunity exists. Now, obviously, that's not entire 30-40 million units that people talk about in the context of the market, but that's a fairly large pie of the market, enough to present a scalable opportunity. However, if you look at this business fundamentally, it suffers from very tight margins. So both 3rd and 4th segments suffer from tight margin. We have invested actively in the 3rd segment, and we have observed that margins have only been compressing over a period of time as more and more developers enter the fray. In the 4th segment, or in the 4th tier, I would expect the margins to be even lower. Now, tighter margins are not a bad thing in themselves, provided you can have a very disciplined execution system. right? So scale, with scale comes the challenge in execution. And though I do recognize Anita's point about the technology, use of technology, etc., there are other things also I feel that need to be done, especially in this segment. So, something like streamlining the approval process, something like making larger pieces of land available to have master planned and well laid out facilities and houses, etc., etc. And very importantly, something on the credit and demand aggregation side as well. So the moment we start moving from a customer who is employed in the organized sector into more informally engaged or informally employed people or customers, the housing loan availability is a challenge today for quite a significant part. And also another challenge is demand aggregation. So, in some countries in the world, the government has come forward and addressed these two shortcomings as well. And this, I think, can be another factor that can catalyze demand. I'll stop there. Thank you.
Yeah, thank you, Ashish. Vipul, I have a question for you. You were talking about how today you are seeing investments giving profitable returns in the sector, and that I'm sure is going a long way in increasing the interest in the sector. So, what do you think is happening? I mean, do you see attractiveness of the index of the sector going up? And what have been the real factors which have resulted in this kind of a change?
See, if I talk in the context of Indian residential real estate market, bulk of the players have suffered because they have essentially been focused on land aggregation and entitling the lands. And most of the organizations till about half a decade back were focused, or their game to play was to get those two things in place. And that is what probably contributed to almost 70–80% of their margins. And very scant, if I may use that word, very scant respect was given to things like processes, efficiencies, cost of construction, scalability, replicability, so on and so forth. And that has clearly changed, as I think Ashish very nicely put. It has changed in the last 5 to 6 years. What has happened is that clearly the role that the process of land and entitlement plays in the overall profit has reduced. There is now a play where a developer can actually buy a piece of land of another developer or just do a joint development with another developer and still make decent profit. There are a couple of companies which have done very well on it. As a result of which now there is increasingly a lot of focus, a little bit tech-backed, more on the sales side and operation side, not as much on the construction side, but significantly more focus on process-oriented, construction-led, process-led developer approach. And that is creating the big difference. That is resulting in a lot of these business plans, which erstwhile were based on this, the entire thing of entitlement to ecosystem, that is the affordable housing ecosystem and process efficiency. It is a game changer, in my opinion. It is resulting in obviously a lot of existing players losing their shirt and new players emerging, which is what happens in a churn. India residential market is in the middle of, over the last 3 years, for a variety of factors, in the middle of a churn. And I think over the next 1 to 2 years, a lot of new players which are focused on the ecosystem of development emerging. And that is resulting in a play where you can actually develop a mid and affordable home and still make 15 to 20% return on equity. it's clearly a supply side issue in India. There is the numbers in Indian context for everything, not necessarily only affordable housing. For everything, the demand supply gap is very huge at the lower level, and especially in mid and low income housing. I think the numbers are ridiculous. Like I think Shishir talked about the demand estimation for affordable housing in India being $600 billion. And I can tell you the entire residential supply is, I think, something like $15 billion across the ecosystem. And if you put affordable housing, that is probably single digit percentage of that. So I would not get into things like what's the scalability option. Unfortunately, we are not in tech business yet, so we don't have the luxury of saying that we can scale up 100x year on year or 10x year on year. But sticking to affordable housing, there is serious money being made. There are now about 4 or 5 examples that have emerged in the last 3 to 4 years of developers who have made from private capital, buying land at market price, selling at whatever is the administered price or regulated price, and still making 15-20% ROE, which is very, very exciting.
Yeah, true. And I think critical to this is the efficiency of capital. So the margins are low, but turnaround times are so good that people are. And of course, the sector went through a learning curve. Now there are well-established model. Now, the interesting point which you made about, the kind of scale which is there, I mean, the kind of opportunity which is there vis-a-vis the existing real estate market. What I would want to bring in Anand over here. Anand, what do you feel? What is the kind of capital? What are the different kinds of capital which would have to come in if you really have to bridge this kind of a gap? I'm sure subsidy-based approach is not the solution, but then what all can happen? What kind of capital can come in and bridge this gap?
So, Saurabh, it's an excellent question. Okay, and as NIIF contextually, we are fortunate to be managers of sovereign capital, of DFI money, of multilateral development bank capital, pension funds, insurance companies. So we've got a broad range of investors who invest through us into various strategies. And I think what sort of that gives us the ability to do is to also get feedback, understand what investors are looking for. So let me broadly categorize, capital into 2 or 3 different buckets, right? So first you have the private commercial capital. What does that mean? That means a strong commercial return, and that prices in risk very efficiently and make sure that the return that it's demanding is commensurate with the risk it's taking. So that's your pure commercial capital, and this would be your pension funds, your insurance companies, global, domestic, both of these. And then you have development capital. The goal of development capital is basically that, right? So how can you go into sectors and economies where you can cause a large amount of development, go into affordable housing as a sector, provide homes to people who are at the lower end of the affordability scale. It's a huge opportunity for development capital. From a returns point of view, maybe their expectation is slightly lower return than commercial capital. So they're happy with a slightly lower commercial return, but their focus is on creating new homes and giving access to the lower income segment of the community. And then you have pockets of capital which are basically concessional financing, right? So is there appetite for a certain class of capital, which might be, call it CSR, call it foundations, call it, those types of capital, or which basically have the ability to say, look, our primary goal is development and impact, and we are happy to take a first loss, for example, or up to a certain extent. So I would categorize capital broadly into these 3 main buckets. And what underpins all of these, what underpins the motivation for all of this capital? One is a huge amount of opportunity set to deploy money and to make sure that, it is going into productive investments. And, ESG standards. So are we causing social development? Are we conducting business, or is our capital going into businesses that are conducted at a certain level of governance? And usually the bar is pretty high. Are we being mindful of environmental standards, of social and equity requirements, and all of those aspects? So I think that sort of underpins what all of this capital is looking for. And then when I step back and think about, is affordable housing of a magnitude in India, of a magnitude where there is a huge need of capital? I think the answer is yes. could it cater to all these types of capital, depending on, what the structures are available and what kind of flexibility is there for the managers of that capital to bring this capital in? Right. So if you are innovative, if a manager of capital can offer different types of structures to these investors, show them that what they need is possible with flexibility, and sort of be innovative in how they're structuring products. I think there is no dearth of capital for affordable housing.
Thank you. I'll take the question. See, when we talk about different kinds of capital, of course, the returns are at the core of all these investments. Now, my question to Ashish is, Ashish, you had made some very interesting points of on-ground challenges, and many of these challenges actually result in tight margins, or there's hardly any margin of error. So your views on-ground challenges and what can be done to ensure that the basic returns expected by investors can be provided by the sector?
Sure. So let me first put it in perspective. When I made the comment that there are challenges, I do believe that in the third segment, which in my opinion is really mid-income housing itself, there is tremendous opportunity for scale and growth. Now, when we try to move into lower segment and the segment 4, there the margins can compress to as much as or as low as high teens or low teens, right? And that's where you must have a very strong discipline on both timelines and cost of delivery, and also a very good predictability in terms of when the demand will show up. Additionally, you also cannot afford delinquencies on payment. You also cannot put up delays in approvals, and you must begin with a very reasonable cost to enter, right? Now, for all these things to happen, there is a role that governments can also play. And why not? Because they are a very important stakeholder from an ESG perspective as well, and political perspective as well, which Anita rightly pointed out. So already there is opportunity in the third segment that I just talked about. Now, the challenge is that, in terms of just pushing the envelope on ESG and some of the practices, that's a very significant investment. So as an investor, I think when I'm investing into building all that credit, all that reputation in the market, what more can I do in terms of scalability, right? So there, you got to choose your partner well, and you got to back it up with significant amount of capital, then spread your capital across too many partners, right? And in the fourth segment, I think all stakeholders must be called to contribute. And I do think that there is a very strong opportunity. There are some very, very good examples of projects that were launched in the fourth segment. And there, what happened was the demand aggregation upfront was so significant that they, many a time when you talk to an affordable housing developer, they'll quote those examples. However, something as simple as the steel price rise in the last 1 year's time, right, can actually wipe out a lot of your margin in that segment. So there has to be a model for delivering, and in our country, we don't even have general contractors who are willing to underwrite the cost, right? So the developer is really the general contractor. So given all that, there is a lot of risk that must be bedded down, and that must be ring fenced for the segment to be profitable. And profitability, predictable profitability is key. The returns may be 15 to 20% or 20 to 25%, but there is a capital that will chase different segments of return if the returns are well predictable and of scale. So there is an investor for all different types of, so really return must be matched with risk. If the returns are compressed, then the risk must be compressed to find the capital that can unlock the opportunity.
Interesting. Thank you. Anita, I would want to bring you in some very interesting points made by Ashish on risk management strategies. What do you feel can be done to reduce or to flatten the risk curve and which in turn would help ensure more fund flow to the sector.
Actually, I couldn't agree more with Ashish. And as everybody was speaking earlier, I was thinking as a long-term institutional investor, for us, just as much as the returns is the risk-adjusted returns. Risk becomes a big factor. And I think some of the things all of the speakers before me have touched on. So one is really predictability, and that links to risk once again. That to be able, even when the level of margins are low, to know what you can expect is very critical. So that I would say would touch on government regulations, policies, availability, no sort of undue delays in terms of construction and putting up projects. The other is really the business model, because unlike in infrastructure or in office, commercial buildings, etc., in the affordable housing, you really have to look at either build to sell or build to rent models. And here you cannot be opportunistic like in the office or commercial space, where you can increase rents if there is a demand and a shortage of supply. I think there are certain risk factors, for example, like the sensitivities to increase rent in the affordable housing sector, which could then result in a backlash. So I think these sensitivities, being aware of them and handling them properly. One idea that was mentioned by Anand in terms of bringing in different kinds of financing, the concept of blended finance, particularly in the affordable end of the sector, is another way to attract other long-term institutional investors who can come in with some amount of a cushion in terms of risk. So I think really to sum up, it's managing the risk effectively, predictability of regulations, policies, timelines, and also in some ways all of the factors that we mentioned by the different speakers in terms of design, in terms of scale, in terms of availability of land. All of those factors, I think, need to be addressed. And the good news is that they can be addressed.
Thank you. We are out of time. One last question to all the panelists. And this question is, what is one thing that you would change to improve the fund flow to the sector in India? One closing remarks with just one thing which you feel if change would help the sector. Vipul?
I would say involvement of bigger players, and that would be the single biggest point from my side. Yeah.
Ashish?
Yeah, I would like the government to set up a large credit guarantee sort of mechanism for all informal sector employees.
That's a very interesting point. Anand, your views?
I would say faster execution, sort of, which I think is it leads to a virtuous cycle, right? So faster execution leads to better predictability, better risk management, better returns, and that then brings in more capital.
And for that, you're looking at some kind of policy reforms, some kind of zoning reforms, something which can reduce inefficient time going into projects.
I would think speed at every level, right? Whether it's a local municipal level, whether you're looking for approvals or any zoning changes, speed at every level where you have an interface with a government agency.
Yeah, Anita, your remarks on one thing which you would want to change to help the sector?
I think maybe 10 examples of great scaled up projects which are profitable in the affordable housing sector. so that investors like institutional investors can see that this is happening. It's a reality. It's a sector where we can put in our money and get good returns. I think examples such as those will really start the momentum going.
So some very good thoughts coming. In fact, something to get bigger players to participate, credit guarantee, faster execution timeframes, improving efficiency, as Anand said, and then of course benchmark projects to be brought in to be showcased to help establish the success stories in the sector. I think it's been a wonderful discussion, ladies and gentlemen. Thank you very much for your time. And I don't think we have time for any questions anymore. So with the permission of the chair, I'll hand it over back to Shobhit for him to take this forward.
Thank you, Saurabh. And Shishir, for sizing up the opportunity. Very well moderated session. For a subject as big as affordable housing, I don't think 30 minutes could do justice, and that too with such an eclectic panelists with us. Thank you, Anita ma'am. Thank you, Vipul, Ashish, and Anand. I agree that this opportunity size is massive, but it requires to enhance the capital efficiency and therefore attract more capital. And like everybody mentioned on the panel, saying if we do the right things, there is no deficiency of capital that's available, whether you dip into the ESG pool, insurance companies, or do any other kind of blended pool of capital.